Welcome to 12 Pro Stocks. My name is Abhilash. So today I'm going to explain you about watchlist. One of the most frequently asked questions in the channel is about how to make use of this watchlist. What to do with those, right? So every single day you see a bunch of stocks being posted as a watchlist with a specific category for the group of stocks. But most of the folks are not able to make use of that watchlist because the setup idea is not clear. Okay, so today I'm going to try explaining what's my setup and how I prepare those watch lists and how you can act on those watch lists on the following day. Okay, so we will also talk about where do you enter, right? What are the different strategies you can enter the stocks, and followed by I will also show you a demo in Thinkorswim. Okay, Thinkorswim is a platform that I use, one of the platform I use, but you can achieve the same in any brokerage platform. Thinkorswim, Webull, Robinhood, right? You name it. Everybody has these features in terms of order entry. All right. So let's get in here. So this is the watch list I published today. Okay. This is the watch list. Now, how do I select this watch list? I have a specific criteria that I look for, which is the setup, right? So the setup that I look for, almost invariably, you'll see a linear move before the brief consolidation. Okay, what I mean by linear move is stock should go up in a strong uptrend, right? If you see here, there is a stock that went up, and this is a strong uptrend. Okay, this whole thing is a strong uptrend, 42% move. Okay, now after stock made such a strong move, right, it needs to pause, it needs to take rest, right? Imagine like a runner, right? They can't be running for hours, right? They need to pause before making another lap, right? So this is in similar to that. Stocks do take pause or take rest before they make another leg. Okay. In a strong market, you will see multiple legs of these moves, like leg one, and if I clone this, right, and then leg two, potentially, right? So that's the expected move for a stock, right? So leg two can go up to 680, right? If it's going to 680, that's wonderful, right? But that is how I expect, right? This is a fake candle that I posted here for illustration. Let me take this out for now. Oh, it's not letting me. That's fine. So what I look for in stocks is the brief consolidation, like 2 or up to 5 or 6 days of consolidation is what I expect in these stocks, so that stock is resting enough and coiling, right? Compressing. The compression is happening. So stock expanded here and then compression, right? So there is a quote in a stock market world. It says like compression leads to expansion and expansion leads to compression. Okay. So here is the expansion. Now stock is being compressed like a spring is being coiled in, right? And then here is where the string releases the force, right? That is where the momentum burst happens. And the direction can be up or down. Okay. Direction can be up or down. Now, depends on what type of trader you are. You can look for short opportunities or you can look for long opportunities. I'm a long trader. I look for taking long positions on the stocks. Okay. So now let's go back, right? So look at this. Looking at the chart, Micron has a two tight days, 1 and 2. Okay. The such a high price stock, but the range is literally barely a 456 and 451, just a $5 range, right? So that's all it moved today. From a percentage point of view, it's very less. Okay, so this is a perfect setup. It is setting up very nicely for breakout in the following day or in the next few days. Okay, so how to make use of this, right? So you want, let's say you want to trade Micron. Okay, Micron. Now, where do you enter? Entry makes a lot of difference in capitalizing a setup. Okay, so this specific setup, right? This specific one here. Let's see what are the different ways we can enter the stock. Okay. Um, Number one, right? There are some folks who prefer to enter low. Okay, enter low. So that means, let me draw the triangle again here, rectangle here again. So this is the rectangle, assuming that this is the candle tomorrow. This is how it's going to appear, right? Let's pretend like this is how it's going to appear. So stock opens below, like here, right? I'm assuming everybody knows how to read candlesticks, right? If not, right, look at YouTube material. There are a bunch of YouTube videos explaining you how to read candlesticks, charts. So let's say tomorrow it opened here, okay? But low of the day is here, right? Today's low of the day is here, okay? So that's your reference point. And we are talking about action tomorrow. We are anticipating everything what's going to happen tomorrow. Like we are visualizing what's going to happen to this stock tomorrow. If it opens below like this, right, and you see that volume is coming in, stock is moving, right, then you want to enter right there with a low of the day as a stop. So what is low of the day? The candle's low of the day is where my crosshair is right now, which is 445.53, right? So that's the low of the day. So maybe give it a room, little bit of room, like maybe $2 or $3, because this is such a high price stock. So you would have a stop somewhere here. Okay, so my stop is going to be somewhere here tomorrow. Okay, and my entry can be anywhere in this range, right? So anywhere the previous day's range. So that is going to be here. Okay, so from here all the way to here, that is my range where I can enter. Okay, obviously the further high it goes, and if you enter, right, your risk is widening, right? What I mean by risk is widening is, if I enter here at 446, right, then my stop is 441, right? $5 risk. Okay, but if I enter here, 462 is my entry, 462, and my stop is going to be 441. That is like a $20 risk, right? So obviously, right, when it is risk is more, what's going to happen? Remember our sizing calculator, right? So when the risk is more, you want to cut down the size, right? So it's very simple math. Let's say I have $10,000 account. You see my sizing calculator here. It's a $10,000 account, and I don't want to risk more than 0.5% of my account on this trade. Okay. So in that case, then I'll type MU here. It's going to pull the entry price based on what is the current price, right? Give or take. And low of the day is this 444.38 is the low of the day. So per each share that I'm buying, my risk is $12.85, and total risk I can afford on a $10,000 account, assuming I'm only risking 0.5%, is $50. That means I can only buy 3.89 shares. Okay, let's round it off to 4. Okay, so 4 shares is what I can buy. Now, if I can cut down this to, let's say, 450, okay, then obviously my risk is less, okay, and I get to take more shares. You understand that, right? So position size always depends on how much you are risking per share. Okay, that's how Stealth Pro operates. Okay, now let's let's decide that it's going to be 4 shares we are trading tomorrow. Okay, so the higher you go, the risk is going to be higher. So that obviously brings up a question: when is the right time to enter, right? So that's a skill we have to learn over the period of time, and sometimes there is no right answer as well, right? So depends on the market conditions. Sometimes stock might move from the middle of the day, sometimes stock move right on the get-go, right? Depends on the market conditions. If it's a bullish market and you are looking at a favorable stock, that market is treating well, right, then those stocks often run as soon as the market opens. Okay, so we are not going to look at the screens all day, right? So most of you are working people, right? So you're not going to look at the screens all day. So the best way to tackle this is wherever my lines are drawn here, right? Look at the chart and make up your mind in terms of where would you enter, right? So I would set up alerts. based on my entry points. If the stock hits 446, then I'm interested and my stop is going to be 441. If the stock is above the previous day's high, right? This is another way. Previous day's high, if a stock, you want confirmation before taking a stock. You don't want to get the stop loss hit, right? So you want confirmation. One way to look for confirmation is when the price goes above the previous day's high. Previous day's high above the previous day's high. Okay, so you can set up an alert right here. Say like, hey, add alert at this price. Done. Okay, so create the alert. Or if this is your alert, like you want to enter low, right? Enter low. In that case, set up another alert. So set up multiple alerts in your trading platform. Okay. So this is possible within Thinkorswim. This is setting up alerts in possible in Thinkorswim or Webull or Robinhood, right? Everybody started giving alerts now, right? So you can set up those alerts or triggers, whatever they want to call it, right? Idea is to, when the price meets that price, it will send you an alert. So you can act on it. Okay. So that is one way of trading it. Now, depends on your style, right? Some members are like, working people, like I said, alerts are firing all day long. They cannot act on it. So they want something easier, right? So they want something easier in the sense like, okay, I'm going to spend about half hour or 1 hour a day to set up these alerts, like, and not alerts, set up these trades. It is possible to set up these trades using a technique called buy stop limit order. Okay, BSLO. BSLO orders is one way to approach it. How it's possible, right? So show you let me show you Thinkorswim platform where how to set it up. Okay, let's see the Thinkorswim. This is my Thinkorswim. Give me 1 second. This is my Thinkorswim. Okay, I'm entering MU. This is the price I'm interested in. I want to buy 4 shares because I know my size. Already I calculated my size upfront. So 4 shares. And here I'm choosing a advanced order option, and I'm choosing first triggers sequential. Okay, first triggers sequential. That is what I'm configuring. It is advanced order. In the bottom you'll see it. So you need to figure it out in your trading platform like Webull or Robinhood, how to set it up, right? So you need to figure that out. Okay, now I need to, so this is what's happening is like I'm looking for buying 4 shares. That is the size I calculated at a price point what I'm interested in. So let's say my alert which I'm going to configure is 456. Let's say tomorrow if the price crosses above 456, that's when I'm interested to buy. You don't want it to fire immediately. You don't want it to fire when the price is 454, right? Less than 456 bottom line, right? So you don't want that to fire. So what I'm going to do is I'll set up a stop limit order. You're buying with a stop limit order, BSLO. Okay. So that is a 456 and it is effective only for that day. Remember, these watch lists that I post are, it's like, fresh vegetables. They expire or they get rotten as soon as the day completes. Once the day completes, everything could change. Okay, so if it shows up again as a good setup, then you'll see the same stock appearing in the watch list again. Okay, so that's why it is important to keep this effective for that day. Okay, so I have my stop limiter BSLO order ready. Next thing I want to do is add a protection. What if I'm wrong, right? Uh, that is very important, right? So in stock market, there is no way of being certain, right? No one can say like I will succeed 100% of the time, right? It is always risk and probabilities. So in this case, what if I'm wrong, right? That should be the first question we should be asking whenever we place a trade, right? So that is why we are using this risk calculator or sizing calculator, right? And here we are using this option to set up the stop order now. So my stop is going to be low of the day. What is my low of the day? 444.38. So I'm going to say 444 as my stop limit. Okay, keeping it keeping it generic. Okay, and it's going to be a stop order. Stop. Okay, you can have a stop order or stop limit order. It's up to you. Okay, and this is important. I want to set it up as a GTC order. What is meant by GTC? Good till cancellation. Okay, I want to set it up as a good till cancellation order. Why? Why? Because now order has been placed. I bought 4 stocks. Stock is going up, or some days are like it could consolidate for one more day and you got in early, right? It is quite possible that you got in early and stock is not going anywhere. So in that case, right, on the next following day, if it is day, if it is effective for that single day, this stock will expire. This order will expire. That means you don't have a stop anymore. And if you're not watching, if you're not monitoring your account regularly, right, then stock could go down and you could be sitting on a drawdown. Okay, you don't want that to happen. So you want to have it as a GTC order. That means this stop order will still continue to work, right, until this stock is up, going up in the direction that you traded. Okay, so it is going to be GTC order. So there you go, right? You have a BSL order ready with a stop order, and we set it up as advanced order. First triggers sequential. That means if it triggers the first one, then it triggers the second one. So that is perfect way of setting up an order with a stop. So you are uh, taking a calculated risk, right? And if that risk needs to be executed, then you're already putting a stop order. So you are out of the stock and risking 0.5% of the account, which is like $50 on that single trade. Okay, so uh, if you notice here, we should not be worried about how much you're investing anymore, right? In this method, well, the method that I'm using is you don't have to worry about how much you are investing. Okay, reason is you're only losing $50. That is the one you should see. That is the one you should see, and you should not see like, oh my god, I'm putting 2000 on this trade. That is not how you should see it, right? You should see it as like I'm risking only $50. This trade is worth $50. That's it. Now if the trade worked, you might be getting 200, right? Because this is a high price stock, 450. Just 1% is equal to $45, right? Approximately 45. So if it is 2%, then it is $90. That's a excellent risk reward. Okay, so we are talking about per share, by the way. 4 shares, 4 times 45, which is equal to 200. Okay, so that is like a $50 risk. Reward is going to be 4 times risk. That is called 4R trade. All right, that's it. I'm going to confirm and send it. I'm going to say click confirm and send it. Done. I'm all set, right? I don't have enough cash in this, so that's why it's not letting me place the order, but you got the point. Okay, so that is how you would take advantage of these watch list. Now let's walk through these steps for some other stock. Okay, let's say Amazon. Okay, same setup, same look and feel like Micron. Stock is moving up in a linear fashion, very strong uptrend, right? We all know Amazon, right? It's been sitting in this zone for a long period of time, and then it covered everything within just 10 days. That's like a historic 10 days, right? Maybe 11 days. So stock went up. Now it's taking a pause. Day one of the consolidation, day two of the consolidation. Same logic applies here. I'm interested in taking a trade if it breaks out tomorrow. So I'm going to set up a line here, something like this. And I'm going to set up another line here. That is the low of the day. So anywhere between these two lines is what my entry is going to be. The closer to the bottom, I can take a bigger size because my risk is low. The away from the bottom, smaller the size because my risk is going to be more, right? But regardless, your account risk is not going to change, right? Your account risk is going to be just $50, right? Because mine is a $10,000 account, right? Assuming if the risk is this risk per share is lower, then it allows me to take more number of shares, right? Like that. So now Same story, you can set up a buy stop loss orders within the range, depends on the style that you prefer, right? Ideally, everybody wants to risk less, right? Take more shares. If it moves in my direction, then I want to make a difference, right? Ideally, that's how it is. So if you know how to execute perfectly, right, that would be awesome. But if not, for a lot of people, they look for confirmation. That means confirmation is if the price goes above previous day's high, that's a confirmation. That's one way, right? Then you take the order. So set up those BSLO orders with the stop order as well. That's it. So you basically queue up your orders on the night before. In the night or before market opens, that's it. Go to work and end of the day, see what happened. If it works, it works. If not, you know your risk. That is how these watch lists work, and that is how you're going to set up in your trading platforms. Okay, so first things you need to learn is learn what is BSLO order. Okay, what is so you need to figure that out. How to set up a BSLO orders in your trading platform, be it a Webull or Robinhood, right? So figure that out and then draw these lines or at least mental lines and place those BSLO orders, or alternatively set up those alerts, right? So just it's easy to set up those alerts. Just right click and set up the alerts at the price point, and that's your entry or exit, right? You can also annotate your alerts saying like, hey, this is what I want to do, right? You can write some description for those alerts as well. Some platforms do allow you to write descriptions, so you can write those to give you enough hints. And if you get more screen time, then alerts is the right way to do it. If you don't get screen time, then it is what it is. You're going to set up a BSLO orders and go from there. Okay. Hopefully this helps in terms of how to make use of this watch list, and talk to you in the next video. Enjoy trading.